Alright guys, Cisco Systems Inc. CSCO. I'm going to do some stage analysis, Stan Weinstein on the weekly candle chart. But first we're going to start with my monthly chart trading framework and see where the higher prevailing trend is going to get us, guys. Let's do it. Trend line. Ooh. What is that? What is happening? Cisco, you trying to break out here? Look at that, man. Cisco, look at that. Nice, crazy base right here. Whoa. What's that? Tech bubble? Yeah. Ew. Look at that. That's why I say when I start seeing the NASDAQ, when I start seeing this, that is scary. Anyways, it's too, like a straight line, man. How could that, on the monthly candle chart, man, how could you sustain that? Well, eventually you don't. It just it starts breaking down, sideways move, and sideways move for a few months, and after that, timber, and then you start the whole cycle again. And here's where we are today, guys. So we seem to be having a continuation breakout right here. 1, 2, 3, 4, 5, 6 months consolidating. If we get a close above 44.80, and if we have a monthly candle close above that, then what would be my target? What would be my target? Let's do it. Arrow, bottom to height. And remember, I draw my trend lines, my lines based off the candles opens and closes. You see right here. Let's zoom it in. Right here. There's an open here. So that's how I set that up. The wick, as I always say, this is noise. And if you want to think about it this way, let's say you'd be drawing your trend lines, you wouldn't look at the opens and closes, you'd move your trend lines and you put it at the wicks. Well, you're kind of destroying the advantage you have of that candle's time frame. It's a monthly candle, and now by putting your trend lines up here is you're recognizing the intra. That means the weekly, the daily, the hourly, the minute, even the second action. Like, you're including it in the definition of that important resistance, that breakout line. But when you think about it, you've spent less time on those smaller time frames than you did on this one. So the price action probably was here for a fraction of a second, and the lower you go to the bulk here, the bulk of the candle, the more time you spent the candles, the price action in here. The weight of the higher trends, you want to make sure that you give it its full advantage. You want to exclude the noise of the intra candles. The market decides that it wants to close the month at that price, then you got to respect that, and as the weekly, as the daily. But remember, those time frames are just fractions of the monthly. So there's 4 weeks in the month. So you see, so there's probably some weekly closes in these candles right here, in these wicks. And same thing, if we zoom in on the weekly, the wicks of the weekly have some daily closes. But remember, 7 days in a week, 28 days in a month. And all that noise is eliminated by the closes. So that's pretty much why I always draw my lines using opens and closes, excluding the wicks. Don't reduce an advantage you have of a time frame by drawing your lines on the points here. It's okay, but it's just that you might be creating whipsaws, right? Because since you're considering that to be the breakout line, let's say this, and it's not monthly defined, it's hourly defined or daily defined, that the price action that brought the wick all the way up here, then sure, you could get a close above it. But is it really the most important defined breakout? It could be a whipsaw. So you got to check that out, guys. All right. So here we are. Here's my target. That was me spinning off to a different subject. 44.80, and if we close above that, the target is 47.50, 47.44. Cool, right? Monthly candles. Wait for it. Zoom in, weekly candle chart. I have that super duper Ichimoku cloud that I got off Isa Trader on sagehouse.net. It's from one of Stan's points. Make sure there's no close overhead resistance or support for the breakdown. And it's a good way for me not to cheat myself. Sometimes you see candles and it's too far away. They're not important. Well, the Ichimoku cloud calculates everything for you. If the price action is above, you have a green support cloud here. And if the price action is below, you have an overhead red cloud above, which is resistance. So this is uptrend, 30-week moving average, uptrend, price action above 30-week moving average, uptrend. Except here, right here. So what happened for Cisco, maybe a little while back, a few weeks back, you had some exit signals. 1, 2, 3. Yeah, break on the 4th or here. And Stan, a trend line exit is, he needs 3 points to validate the trend line, not 2. 1, 2, 3, 4, and break on the 4th or 5th. And then would have exited here. That's all right. You're out. Don't worry about it. You're below 30-week average. Now you're super happy. Hey. But look, price action goes back up. Says, oh no, I'm missing. It's all good, guys. Wait for the chart. Look at the Mansfield indicator. It's super duper. The way they coded it is you're above the 0 line. I compare it to the SPX, the baseline. That's just the basic. But it also highlights a green area when the 30 moving average is inclining, one of Stan's tenets. Make sure the 30-week moving average is inclining and that you're closed above it and the price action is above. And that makes it green. If any of those three conditions are out, you see even here, it turns gray. Even if we're above, we're still outperforming the SPX. Right here, the price action is below the 30-week average, so it's gray. And if it would have been declining and below the 0, then it would have been red. We'd have had a red zone. So that's a pretty good clue of the trend. Even Stan, this pretty much encompasses the entry and almost the exit for Stan. But as we bring it up a notch, we're going to do it old school. Look at that. Look at that, beautiful. Every time I look at a chart, sometimes I focus on an area, but you know what I did? I just looked at the volume here. I said, look at that, double that volume, twice the average of the previous 4 weeks. Well, there has to be something up. Well, it happened that was the day that it crossed over the 0 line, outperforming the SPX. That happened to be the day that we went above this horizontal breakout line. See, I didn't even draw this horizontal breakout line before. You just look at the volume. Oh, candle. And what happens? Oh, by miracle, it was an important key moment. So just by looking at those big candles that are twice the average of the previous 4 weeks, even here, there's another one right here. See that? It's magical. Look at that. Don't even look at the chart. Just look at the volume. And that proves or gives more weight to the fact that volume is important. These important levels where there's horizontal that bursts through. Look at that, the energy. You see it in these candles right there. Pretty cool, right? Reverse engineered that trend line. How awesome is that? All right, so now we're out. And now the price action seems to want to go back up, guys. See these two lines? That's my monthly defined resistance and support. And remember those wicks I told you about? It's this price action right here. Those are the wicks. Those are the wicks. The wicks. And C could have thought, oh, I have a breakout here. Not a breakout, guys. You have to wait for that monthly defined super duper important breakout line. Right here. See, if you would have relied on the weekly, you had to close above. You would have thought, hey, it's time to go. Maybe. But the price action closed within the month, the end of the month, closed below that important breakout line. Plus, there's a whole bunch of other factors. Didn't have the volume, twice the average volume, and all those observations that Stan did over his years, putting in his book, Secrets for Profiting in Bull and Bear Markets. It's all a question of observation, guys. And even you, keep looking at the charts. You'll start seeing stuff. You'll start observing. But you really got to focus. Don't spread out too much and just keep looking. And eventually you'll start seeing behaviors, repeatable behaviors. So here we are. And now after this little exit, it seems to want to go back into stage 2, guys. So stage 3s can become stage 2s. This is awesome. Off the zero line, upwards territory. What else is awesome? Not quite twice the average of the previous 4 weeks. And break above a horizontal breakout line on the weekly. So we have almost all the elements. All we want now is a close above that monthly candle chart. And for us, it's a go, guys. We have our target right here. Implied measure move from my monthly chart trading framework. And then we have a stage 2 continuation. So that's pretty cool. Yeah, it's a nice stage 2 continuation breakout off a small period in the stage 3. Ideally, guys, what you want is you want to be playing at these bases here, these embryonic breakouts right here, here, continuation off the top, off this what I call volatility for me. I love these small increments, small steps. I love that stability. It's like a ninja winning, ninja profits. Just don't notice me, don't sell. Nobody knows what's happening, and then market gets its attention. Hey, what the hell's happening? And then let's take some profits. Hey, and I don't like this, but it has to happen. Pullbacks go up high, and the longer the consolidation period, the more we have a chance of getting back into this small increments, going up time over time, building wealth over time. So let's just wait, see how this pans out. The month is not over yet. This could easily close within the boundaries. But right now it's looking for stage 2 continuation breakout, guys. All right. Thanks for listening. Ciao.